Started with $1 in a dream. This one
Good day, Forex
for all the
users.
people that said I
Thank you so
couldn't do
much
it.
for making it on to lesson 3, and we're looking forward to adding value in your knowledge. Now, on this lesson, we'll be speaking on currency characteristics. And the topics that we'll cover is the majors, the crosses, and the exotics, the pair characteristics, and picking currency pairs to trade. The first topic that we're covering is currency characteristics. Currency have correlations between one another. Usually USD strength is visible against both Euro, Pound, and AUD and New Zealand dollar. Currency triangle. If you have two currency pairs and doubting between the two, check the cross of it. Meaning that if you are trading Euro US dollar or AUD US dollar, you can take a look at Euro AUD. Well, what does that mean? What do we mean? Okay, meaning is that if Euro AUD, Euro sterling dollar is in an uptrend motion, uptrend direction, and if you're trading EU, meaning Euro US dollar, it's long, it's an uptrend similar to the Euro AUD, and AUD US dollar is in short, it's going the opposite direction. And if you're looking at Euro AUD being in a downtrend, so trading Euro US dollar is short, meaning that the Euro the Euro is losing strength, Euro is going short, losing strength, and then AUD Euro is long, meaning that what? AUD is gaining strength, meaning that AUD Australian dollar is gaining strength, Euro is losing strength. That's what it means. That's what the crosses mean. And one thing that I like is that don't use this as sort of like a signal. Don't say just because you're buying Euro AUD and then now you're selling AUD USD. Shouldn't work that way instead, but then look for the setups that they are provided. It's sort of like it gives you clarity on the sentiment of the pair. And now if you look at Euro US dollar, AUD US dollar, Euro odd, a currency here, a currency triangle. Yeah, we saw that. We noticed how they work. EU and AU not moving, meaning that Euro US dollar and AUD US dollar could not be moving, like ranging or something like that. But then Euro AUD could be flying. Euro AUD could be impulsing, and Euro US dollar and AUD US dollar could be correcting. That's what it means. That's why I say don't use this. Just because you're buying that one doesn't mean you have to sell that one exactly. But wait for it to give you clarity on where the market is going. Okay. Now let's look at this. We've got the main currency, which is the US dollar, the euro, the Japanese yen, and the pound. Okay. On our first column right here, we've got the major currency pairs. The major currency pairs. It's your euro US dollar, your pound US dollar, your US dollar Japanese yen, your US dollar Swiss franc. Now, if you take a look at this side, we've got the major crosses of the major currency pairs, meaning your euro AUD, your pound AUD, your pound New Zealand dollar, and your euro New Zealand dollar. You've got your euro pound. These are your major crosses. You've got your pound Japanese, your euro Japanese, your AUD Japanese, and your New Zealand Japanese. And this side we've got your USD CAD, dollar Canadian. Now, if you take a look at your exotics, Euro PLN, USD CZK. I don't trade exotics, so I don't know much of them. Meaning that you can see here it says each pair has certain unique or special features. These are examples of your exotics. There's a lot of them, there's a ton of them, but then these are example of them. And the spread of exotics are wide. The spreads are very wide. So now if you take a look at commodity currencies meaning that your pound dollar, your AUD dollar, your New Zealand dollar, your US dollar CAD, your US dollar Japanese yen, these are commodity currencies, specifically CAD, AUD, NZD. So those are your commodity currencies. And now if you look at capital flow currencies, meaning your euro US dollar, your pound dollar, your US dollar Swiss franc, and your US dollar Japanese yen. These are your capital flow, meaning that these ones are moved by commodities. They're moved by commodities, and these ones are moved by capital flow. We get more volatility from the capital flow of the specific currency, get more volatility from the commodity. Okay, now let's look at the next page. Okay, now we've got the pair characteristics, meaning that we've got your euro US dollar. Let's look at the euro US dollar. It's the most traded pair. It's negatively correlated with US dollar CHF, US dollar Swiss, and positively correlated with the pound dollar, meaning that if euro US dollar is moving up, US dollar Swiss is moving down, and it moves similar with the pound dollar. Average broker spread is 0.5 and 2 pips. This is the average broker spread, meaning that if you had to choose a broker, play around this average broker spread. Don't choose a broker that offers way more spread size. So now let's look at the best time to trade. It's the London session, meaning that if it's the best time to trade, it gives better setups at the London session, and it's more aggressive at the London session. Trade suitable to new traders and advanced traders. Daily average moves from 60 to 100 pips. It moves from 60. It's the daily average. Daily doesn't mean that it moves 60 to 100 pips daily. It can move 250 pips a day. I recently experienced a trade like that, and it doesn't mean that it moves 60 to 100, but then this is the average, the daily average pips. And the factors which affect the euro dollar. We've got the interest rate differential between the European Central Bank, ECB, and the Federal Reserve, FED, meaning that if the news are coming out and it's the Fed or the ECB, they are more likely to affect the euro dollar. And the dollar strength drives the euro US dollar lower. The dollar strength, if US dollar is gaining strength, going up. Okay, let me draw this here. If dollar is going up, gaining strength. Dollar is going up, gaining strength. Okay, here is gaining strength. You can see why we say the dollar strength drives the euro lower. This one goes down. And okay, the Fed intervention to weaken the dollar sends euro USD higher. The Fed intervention to weaken the dollar sends USD higher. It's the vice versa of the one that I showed you guys. Okay, now let's look at the pound dollar. The pound dollar, we've got it's the most traded pair along with the euro dollar. I believe that most guys, when you guys start out, these are the first pairs that you're going to start out with. And negatively correlated with the US dollar CHF, US dollar CAD, US dollar Japanese, and positively correlated with the euro US dollar. I believe you know what that means. The average broker spread is 1 to 3. Is 1 to 3. The average broker spread, meaning that shouldn't look for a broker that provides spread that is way more than 3. Daily average range is 80 to 150 pips, meaning that it's much more volatile than the euro dollar. It's much more volatile. It moves a bit more faster than the euro dollar. The best time to trade is the London session. You get your moves at the London session, and it's trading suitable to advanced and expert traders. It's suitable to advanced and expert traders. Okay, I've noticed this. It's more likely if you have tight stop losses, it will be more likely to take you out. That's why they say it's more suitable to advanced and expert traders. And before you can trade more on it, you can just back test it. Go back on your charts and see what it does when it gets to support or resistance. Or just back test the strategy. But we'll talk more on that. Okay, the factors which affect the pound dollar. The interest rate differential between the Bank of England and the Fed. High yield and attractive growth in the UK drives GBP USD higher. The high yield and attractive growth in the UK, GBP goes high, US dollar goes down. Intraday trading, the pound dollar, very quiet during Asian session, no moves. It's very quiet during Asian session, meaning that other people have strategies whereby they utilize the ranging markets. So other people would be trading it only on the Asian session. And many spikes up and down before Europe and London open. Okay, yes. Before the London session opens, Euro just provides spikes. And often moves 1 hour, 15 minutes impulse on the 5 minutes chart. Okay, you don't need to master all of this here, because this is the back test that was done and tested. But then now you can also do your own back test and understand it better, build a relationship with it. Okay, likes to break bottoms and tops by 8 pips. Okay, it doesn't necessarily have to be 8 pips, but then it does likes to break tops and bottoms by approximately that amount. And highly impacted by news event at 10:30. Yes, that's true. If you see on your calendar, there'll be news that always appear, the pound news that always appear around 10:30, 11:30. And since it's pound news, they most likely affect our pound. Doesn't necessarily mean to be pound dollar, but then pound. And since the dollar is involved in this symbol, then it'll also be affected. Now often retraces deep 78.6 and also 88.6 Fibonacci. It likes taking deeper corrections, and breaks tops and bottoms a lot. It breaks tops and bottoms a lot. Okay, now let's move on to the next page. Pound US dollar is ranging in Asian session. 90% of the time moves less than 30 pips from the top to bottom within first 3 hours of Asian session, meaning 11:30 p.m. to 2:00 a.m. Asian time. And after Asian time, it's more likely to break bottom or top. After Asian time, it's more likely to break bottom or top. Exception: a strong trend is in place on a higher time frame, meaning that if you're moving on to a higher time frame, you are able to spot the trend of the specific pair, meaning the pound dollar. Okay, pound dollar makes false moves before initial intentional move. Pound dollar spikes up and down in the first 2 hours before choosing the direction. Yes, it likes playing around like that. It will spike up and down, play around with people, and you get caught up. If you get caught up on the wrong side of the market, you are most likely to be taken out, and higher chance of sustainable trend in one direction after first 2 or 3 hours finish. Higher chance of sustainable trend in 1 or 2 after the first 3 hours is finished. Yes, it's more likely to continue to provide the direction that it will continue in after those specific hours. And chances of high market quieting down. Okay, let me remove those. Okay, chances of high market quieting down after London close. Okay, exception when there is a strong market trend. Okay, so now if you look at it, it says chances of high market or chances are high of market quieting down after London close. Mean that after the banks are quiet, banks are closed, that's when you are more likely to see pound dollar range. Okay, now let's take a look at AUD US dollar. It's one of the most traded pairs. Negatively correlated to US dollar CAD, positively correlated to New Zealand CAD. Average broker spread 1.5 to 3 pips. Daily average range is 70 to 100 pips. Best time to trade is London session and Asian session. Trading suitable to advanced traders. Doesn't mean that you don't have to backtest it. Go through it, learn it, build a relationship with it, and then now you can be an advanced trader that trades AUD US dollar. And factors which affect AUD USD: interest rate differential between the Reserve Bank of Australia, RBA, and the Fed. It likes to trend. It's a slow mover, which makes it good for new traders. It respects 4 candle highs and lows, tops, bottom. It respects that. And the swap interest makes it attractive, meaning that you can get a positive swap when trading the AUD USD. Okay. Euro AUD. Massive trends and big moves. Pip distance are huge, very technically traded. Massive trends and big moves, meaning that it's more likely to have bigger drops, bigger impulses up or down. And pip distances are huge, meaning that the spread is much more huger compared to the other ones. Very technically traded, meaning that it respects our technicality, our technical analysis. We've got the Euro Pound, one of the crosses. Extremely slow mover, could be good for traders with a job. Erratic movement, spikes and ranges. Okay, now let's look at the US dollar Japanese yen ranges. Wedges can take extremely long to break. Once in trending mood, currency tends to keep breaking and does not retrace deep. Okay, nice. Meaning that once in trading mood, instead of retracing deep, let me have something like this. Instead of retracing all the way up to here, it's more likely to retrace here and then continue its journey. And bull and bear flags are important with the Euro GBP. Okay, bull and bear is, now I meant to say US dollar Japanese yen. Yes, bulls and bear flags are more important, and it likes retracing up to level 23.6 to 38.2 Fibonacci levels. levels. Okay, now let's move on to the next one. We've got here. Okay, we've got here. It's a diagram where I choose this side is the if and this side is then, meaning that if gold goes up, we're expecting dollar to lose strength. If gold gains strength, AUD US dollar gains strength too. It follows it. Gold goes up, NZD US dollar goes up too, meaning that if gold goes up, US dollar goes down. And if you look here, USD it's on the quote side, so it's going down. NZD is going up. Now gold is going up, USD is going down. You can see here. So USD is going down. It's alongside with Swiss franc. Gold is going up, USD CAD is going down. Oil is going up, USD CAD is going down. Gold is going up, Euro USD is going up with it. It's going up with it. Code currency. Dow Jones is going down. Nikkei. Okay, these ones we don't use. Nikkei and US dollar, Japanese yen. Okay. Let's look at the next one. Okay, now let's look at picking currency pairs to trade. Picking currency pairs to trade. Okay, we've got let's say we have two choices here. Two choices. Our first one and our second one. So we've got Japanese yen, US dollar Japanese, Euro US dollar, and gold. Gold is XAU USD. There we go. There we go. Now, here's our second choice. We've got the pound New Zealand, we've got the Euro AUD, we've got the US dollar Japanese, and we've got the CAD Swiss. The CAD Swiss, meaning that if you're about to choose currency pairs to trade, if you're looking at two, okay, this is your first choice and this is your second choice, and you want to open trades now. You want to open 3 trades. Let's say 3 trades to run at the same time. Now, okay, let's look at the first choice. Would you choose the first choice, yes or no? From my side, I would say no, we wouldn't. Why is it so? Why wouldn't we choose the first choice? Meaning that we've got our Japanese yen as the code here, our Japanese yen, our US dollar, and our US dollar. So meaning that if we choose the first choice and we choose, let's say 3 trades here to trade, if it happens that this one goes against us, this one will too go against us. As you can see, the Japanese yen is what? It's gaining strength. The Japanese yen is gaining. So imagine you buying this and you selling this. If you buying this, okay, let's look at you buying this, meaning you're saying this one is going down. This one is going down. But then if you selling this, you're saying this one is going up. This one is going up. So you see how that affects the first choice. How you choosing to trade like in the scenario with the first choice, it's not suitable. So now let's look at the Euro US dollar. Gold, meaning, the Euro US dollar, we've got the US dollar and gold. It's XAU USD, meaning that if we buy Euro US dollar and we buy gold, we're selling the dollar. We're selling the dollar, meaning that if dollar goes gains strength, the dollar gains strength, both our trades are more likely to be in negatives. Both our trades are more likely to be in negatives. Okay, I believe we saw that. And now the best way is to choose the second choice, meaning that we've got pound New Zealand, we've got Euro AUD. It's not the same. It's not the same as this one. There's no currency that's the same as this one. And we've got the US dollar Japanese, and we've got the CAD Swiss. So here in this pay, if any of the currencies here get affected by news or anything like that, nothing's gonna happen to. If this one goes against you, doesn't mean that this one is more likely to go against you. That's what it means. If let's say something happens in the UK, nothing here is gonna get nothing is more likely to get affected because you're not trading pound twice. You're not trading pound twice. So you can see it says the best choice to make is that to be involved in a pair that won't affect another pair. Be involved in a pair that won't affect another pair. Okay, we saw on the previous page, it says that if gold goes up, US dollar is going down. If gold goes up, US dollar is going down. So imagine you're buying this and then you're buying this, meaning that you're seeing gold is going up and US dollar is going up too. That doesn't make sense. Even though it's possible, you can do that. Your analysis can provide you something like that. But okay, can you see what that means? And the second choice is the best because your choices don't affect another pace. Okay. And that was it for our first lesson. Thank you so much for making it, and we believe to see you on our next lesson. Thank you.